Hi, I'm Chase Wilsey, and I'm with Wilsey Asset Management. Now, yesterday I talked about the United States Postal Service lowering the price of stamps. I found this subject so interesting, I wanted to take a deeper look at the financials of the company. Now, in my hand, I do have the 10K from the most recent fiscal year 2015 for the United States Postal Service. I do want to start off and first say they are a government-run company, so they do not issue equity or other securities. But I was surprised to see they do have 10Ks, 10Qs, and I love reading them so much, I did take a deeper look. First off, I took a look at the income statement. For fiscal year 2015, they reported a net loss of $5 billion. Now, this isn't too big of a surprise, as going back to 2011, they lost about $5 billion every year. This is surprising right here, as assets for the company were $24 billion and liabilities were $74 billion. That's never good to see. That means they have equity of negative $50 billion. Yikes, that is just overwhelming. Another thing I did take a look at is the surcharge I talked about yesterday of 4.3% that they were allowed to charge, and that's coming to an end in April, remember, has helped them by $2 billion for revenue in 2015. That surcharge will be gone in April, so they're going to lose revenue. And their expenses continue to increase. Decreasing revenue, increasing expenses, not a good sign. If USPS was a public company that traded on the New York Stock Exchange, I would not be buying their shares. Next, let's take a look at Restoration Hardware Holdings, symbol RH. They're the company of the day. Let's see if they can restore your investment portfolio. They are a high-end retailer of home furnishings, and they do home furniture, lightings, tableware, decor, all those great things. I thought they'd be an interesting look, because with a nice housing market, people could be spending money to improve their home going forward. They did come out earlier this month and said preliminary earnings per share were going to be 80 cents versus the expected $1.40. This sent the stock way down, well off its 52-week high of $106.49 to the current price of $39.15. Looking at the financials here, I did not like one thing. Their debt to equity is 80%. You know, that's not too bad. Anything under 100 I'm comfortable with. The thing I didn't like is their debt has increased every quarter over the last year and a half, I would say. Going forward, estimated earnings per share on a GAAP basis for January 2017 are $3.19. This gives us a target price of $52.64. So estimated return over 30%. That's good to see. Restoration Hardware might not be a quick fix for your portfolio, but definitely an interesting company to take a look at. It is Friday, so tomorrow is the Smart Investing radio show. Be sure to tune in tomorrow morning, Saturday, 8 a.m. to 9 a.m. Very important. Please join me. Tomorrow I'll be talking about the employment situation. The numbers came out today. Staggering. I was so excited to see them. Make sure you listen in so you can hear me talk about them more. Looking forward to next week. I'm very interested to see U.S. consumer spending. Is that increasing? I think it should be, according to the employment situation. Also, I'll be taking a look at the EIA Petroleum Status Report and what I'm looking for next week. As always, it is a call-in show, so I will be answering your investment questions. Have a question about a stock, give me a call tomorrow morning and I'll answer it for you. Thank you for joining me today. Please go to the website now, smartinvesting2000.com, as we do have a workshop coming up, how you should invest in 2016. At the workshop, we will be analyzing a stock that could potentially be a buy in our portfolio. That company is locally based Qualcomm. We'll be reviewing stock fundamental analysis and why it's successful. We'll also be explaining when to buy and sell a stock, and going over the 5 common mistakes the average investor makes. I hope to see you there.